Hello and welcome to the Cryptocurrency News channel. This is the TA, FA, and chart analysis, plus some fundamental analysis for Tuesday, February 8th. We had a good weekend and a decent Monday, but today has been less than stellar. The stock market is up, but I think with everything kind of being overbought over the last 4 days, we did take a little retrace. Now, it's not that much of a retrace. We didn't lose back down into 30,000s. We are still at 43,400, but that is a reduction of 1.37 off of yesterday at the same time. As you can see, we were still kind of in the bathtub shape or the reverse head and shoulder shape, but we did peak at around 45,000, and now we are actually around 43,400. But even at the level we are right now, we are still basically in line with the last plateau. We are still way above our lower plateau and above the last plateau. You have to switch to the 3-month to actually see it. The chart. You can see right here at this red line, we are still basically at the last plateau before we dipped down. Now, this last plateau roughly lasted from essentially, I would say January 5th to about January 20th. So it lasted roughly 15 days. And this shorter plateau lasted from the 23rd of January to roughly the 4th of January, almost the same amount of time. So will it be that we will actually be stuck at this $45,000 area for another 15 days before you go back and forth? I actually hope that we go up from here and we break 45 and 50,000 very quickly. Because if we last for 15 more days, that is getting very close to March. And remember what happens in March. The Fed's going to get together and rate hike us. And that might actually put us back down to the $30,000 area. So I'm sort of bearish if we just basically swing for 15 days like this. But if we can rally later this week with some good earnings reports, and because the stock market is still going up right now, and I think the earnings reports seem to be favorable to the stock market, I do actually think that there's a chance that we'll break 45, 46, 47,000 later this week. But if we stalemate here for 15 days, I do fear, because of the low volume and because we know that interest hikes are actually coming up, I'm very kind of fearful for that scenario. Because I do think there's a good chance we'll go back down for maybe a month more of extended bear market, and that's really not good for anyone except for those that want to buy low. Realistically, even if you go back to early this year and come for right now, realistically, we're actually still kind of up for this year since the 6th of January. You can't go back to the 4th or something, because the 4th we were still back at the upper 40s, mid 50s. But from the 6th of January, even with this little downtrend that we had in mid-January, early February, we're still equal or up right now. So it's not actually that bad, but I really am looking forward for us to going up before the end of this week, because I think if we just stay here for half a month or more, I think the March rates hike will probably put us back down, at least temporarily, and it might be April before we actually come back up. But right now, if we can actually break out of this 45,000 funk, get to 50,000 or above, I do think an all-time high would actually be in play in 2 or 3 months. Now, that might seem very fast for you guys. Remember, we gained 10,000 points in a week, essentially. So because of crypto's volatility and because it does tend to swing, and because stocks do seem to be up, we do actually need to get significant gains before March, or things could be bad. So that's kind of where the technical analysis is for right now. If you look at the numbers, right now, because we actually snapped up so fast over the weekend, I would say short term, you might actually be sort of overbought, because the commodity channel index is over 100 and the stochastic is over 80. But the RSI is actually neutral, and the MACD level is on a buy right now. Momentum is slightly bearish because we did actually bounce back today and we didn't keep rising. But the thing is, we could be just taking a lull before going back up. If you look at CNBC, if you actually go look at CNBC, generally earnings reports are pretty good. There's some scare from Russia, but not really. I don't think they're actually going to attack. They're saying they're weaponizing gas supplies to Europe, but we also knew that was going to be the case, because a lot of Europe, especially Germany, is dependent on Russia for gas. So there's a bit of diplomatic play there. There's definitely a bit of diplomatic play there, but we don't really know what's going on there. I doubt he's going to attack. He's probably just wanting some concessions from the West, is my guess. Hopefully that's true. So essentially, I'm still bullish, but the thing is, we do actually need to gain a couple thousand points within like the next week or two, or we risk going back down into like the depth of the bear market because of the rate hikes. And they're saying they might do as many as 6 or 7 hikes this year, which actually would be a shock to a lot of the market. But I do believe like part of those interest rate hikes are already priced in, so they may not be as bad as people think. So like the 10-day moving average is buy, and all the way down to the 50-day moving average is buy. But the 50-day moving average is still lower than the 200-day moving average. We're still in death cross territory, not in golden cross territory. So look for that. Like that's why we need that's why we need today to actually move past 50,000, because then that would move us into golden cross territory. And people do, if that suddenly happens quickly, people do pay attention to that, and they might actually turn bullish. So right now, like I think we could take a day or two pullback from the rise this weekend and before going up again, but we definitely need to go up again before too long. On the weekly, things are still kind of a sell. We were at the buy range earlier today too for both the EMA and the SMA on the 10, but now it's fallen back to sell. Like the 45,000 line seems to be a big resistance, because that's like where a lot of the technical indicators are actually switching. It seems to have a really hard time breaking that resistance, even with a good stock market movement today. I think like if we have another few days of good stock market movement, especially on the NASDAQ, I do think we will actually continue to go up. But it might take like good NASDAQ markets until the end of the week. Luckily, the futures is barely up on all 3 indexes. Hopefully that continues into the morning. Chipotle has better than expected earnings, and other reports are coming in, plus the consumer sentiment report and the inflation report and the interest rate report. So look for that on Thursday and Friday. Technicals on the monthly still kind of negative in terms of like stochastic in oscillators. They're neutral, but moving averages, we still have to break 45,000 to get the 10-month moving average to be positive. So right now, if you're buying for like maybe like late February into March, not really sure if it's like a really good time to buy right now. If you're buying maybe for the next week, maybe next week and a half, I think it's pretty good because the earnings reports are going to favor us. But right when you get into March with those interest rate hikes and like maybe bigger than expected interest rate hikes, I would definitely pull back before then. Unless the Fed changes its mind, wusses out, and doesn't raise interest rates, which they definitely should not do. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.